Welcome back. Let's now turn our attention to the commodity markets. Manisha Gupta, as always, is joining in. Manisha, morning. What are you looking at?
Well, thank you for that. I'm looking at soft commodities right now because these are the ones which have seen big losses when you look at the first half of this year until now. Well, on my radar is sugar because we've seen sugar prices decline quite sharply. There is weak interest from the buyers at the Intercontinental Exchange, and the sugar prices, with the kind of decline that we've seen trading below 16, are now at a 2021 low. So it's a multi-year lows that we've seen come in for the sugar prices there. Also, when you look at the overall supplies, those have been increasing as well. We have high production in Brazil. It also has to do with abundant rains that we have seen in Asia. That is leading to a higher production coming in from India and Thailand as well. So that is not very supportive for the prices. Also going forward, because the crude prices have continued to decline, the ethanol prices have declined. So there is more that you've seen as cane going for sugar rather than ethanol, increasing inventories yet again. The other one on my screen is cotton, where the prices are now trading at a 2020 lows. The US production is expected 6% year on year. The other major producer is India. Here as well, because we're looking at very strong monsoons for the month of June, 109%. July is expected at 106%. So sowing here also has gained quite strongly. The markets also are looking at weaker demand coming in from China, and that clearly seems to be weighing on prices. The other one is Arabica coffee. Here as well, we've seen prices decline to a 6-month lows. Higher crop supplies in Brazil, higher global inventories, not so strong demand coming in from Europe has been weighing onto the space here as well. And the last one is soybean. The prices here are trading at around 12-week lows. There is higher production in the origin countries like Brazil, Argentina, Australia, US, including India as well. For India, we are trading below MSP now for 8 to 9 months. And the Chinese buying is not so strong because of the tariffs that they have in the international markets, especially from US, and that continues to weigh on as well. I want to take you through on what we've done in this year until now in sense of prices then. And I'll start with edible oil as a space. Barring soybeans, which is up by nearly 3%, you have sunflower, which is down 3%, and palm oil prices down by 9% in this year until now. Take a look at the grains then, and wheat is down 3%, and you have corn prices trading 9% on the weaker side for the year 2025 till time. Good production, especially when it comes to wheat, whether it has been about Russia, Ukraine, India for that matter, continues to weigh on prices. And then you have agriculture, industrial commodities like rubber used in gloves and automotives, etc., and cotton for textile and polyester, etc. As you can see, double-digit percentage decline here as well. Cotton is down by nearly 15% and rubber down 17% in this year until now. And this is the final plate which shows you sugar, cocoa, coffee. And as you can see, we've seen sugar prices decline by 18%. Cocoa is down 24%, coffee down 8% as well. So overall, inflation when it comes to food commodities is definitely does not seem to be a concern because the first half of 2025 has seen very sharp declines coming in for most of them.
Thank you very much for that. Now